Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario on the 4-hour chart, where we're looking at a finished regular flat in a 3-wave A, 3-wave B, and a 5-wave C. The common target for your wave C is the 1-to-1 trend-based fib extension from the high to the low of A to the high of wave B, which as you can see is nicely respected, and in this scenario we want to see continuation to the upside. Now on the 1-hour chart, we then have to count an impulsive structure to the upside, which is in this case an expanding diagonal. Now it has to be said that expanding diagonals are rare, but this is one of the two only bullish scenarios that are left, with the second one still being an alternative, as I will show in a second. So here we have our wave 1, our wave 2, 3, 4, and then we're looking for a wave 5. In this diagonal, all of the waves are zigzag structures. We have a nice 3-wave move up in a wave 3, where wave C and then a wave A, B, C, 5, 3, 5 also hit the 1-to-1 trend-based fib extension from the low to the high of A to the low of B, which is exactly what we like to see. In this case, we are looking for a wave of 4 to finish somewhere soon, because the invalidation for 4 is price moving below wave 2 at 62.9k, and also this is the final little bit of area of support for this wave 4, the 786 to the 886, which is between 63.9k and 63.4k, where I also have this small support area sitting here, the blue box between 63.8k and 64k. So that is pretty much the only area of support here, this box that I have, before potentially bigger drop to the lows here first of all, and then possibly into or around the 62k area. Now in this scenario, what you would like to see is price to move towards the upside and hit the 0.618 Fibonacci taken from the high of B to the current low that we have. An impulse to the downside would look like a wave 1, 2, 3, 4 and a 5, where wave 4 will not hit the 618. You get a range the size of this wave B and then another drop to the downside. But in this scenario, we don't actually want to have that sideways range and another drop, as then we're counting this as an impulse. Instead, we like to count a 5-wave structure to the downside and then move back up to the 0.618, hitting 65.7k taken from the high to the low that we have at the moment, to invalidate an impulse to the downside, as an impulse will be more bearish. Now the target area for your wave 5 is taken from the low of this wave 2 to the high of 3 to the low of this wave 4 with the trend-based fib extension tool, and it is between the 1 and the 1.618, giving you a target area between 68k and 70k. Now in an expanding diagonal, wave 5 has to at least pass the 1-to-1. It has to be longer than wave 3. So this is your minimum target at 68k, and what you can see is that the resistance here is nicely positioned inside the box, sitting between 68.2k and 69.2k, and around 70k we also have a bit of resistance here, just close to the 1.618 at 70.8k. The alternative diagonal is this diagonal here. So price moving towards the downside, if we move below this low and invalidate the expanding diagonal that I've just shown, we are looking for a complex structure in a WXY to the upside in a wave 1, where eventually we look for a bigger ABC to the downside in 2, ABC in 3, in 4 and in 5, creating preferably a contracting diagonal, as a contracting diagonal is a lot more common compared to an expanding diagonal. Now the common target area for a wave 2 in a contracting diagonal is the 786 golden pocket area. The 05 is second most common, I suppose, but the common target area here is 62.5k, 61.2k. A bit less common is the 05 382, 63.4, 64.3k, and the 886. We don't like to touch the 886 with a wave 2. Now in this particular scenario, all of the waves have to be part of the zigzag family structure. So here we have a double zigzag in a WXY, an ABC up, ABC down, and then another ABC to the upside in wave Y, hitting the 0.618 trend-based fib extension from the low to the high of W to the low of this wave X, which is a target for a wave Y. As you can see, that has been hit. And then we are looking for zigzag structures or zigzag family structures in the other waves. Now in the bearish scenario on the 4-hour chart, we are continuing this range sideways. So we have a finished regular flat, right, in a wave A, B, C, but this now is labeled only as a wave W. This wave X could potentially be finished over here, where then we look down for a wave Y in a sideways double combo WXY, where most commonly wave X is a zigzag family structure, for example the WXY as just mentioned, and then in wave Y we are looking for a zigzag to the downside, or we're looking for a triangle, or possibly even a flat. It's a little less common to have a flat in W and a flat in Y, but it is possible. Now, if wave X goes on top of the high over here, we are counting a WXY, which is possible in a wave X. That's not a problem, but the problem is time. You can see the vertical line on my chart. That is a fib time taken from the start to the end of wave W. Double click over here, comparing W with wave X in time, and preferably waves do match or at least have a certain relationship between each other in time of at least the 0.382. So preferably wave X finishes at least somewhere after the 0.382, which clearly is not the case with the high that we have over here. So therefore, a scenario to extend this wave X in time is this flat structure where the WXY is labeled a wave A. So we have the same double zigzag, WXY in a wave A, 0.618 over here, nicely respected, and then you want to see a zigzag to the downside. So this is where the impulse to the downside is important. We want to see a wave 1, 2, 3, 4, 5. So in this scenario, we do like to see a sideways range the size of the range we had here or longer, and then another drop to the downside, and that is exactly what we don't want to see in the bullish scenario. So that makes it relatively easy to see the difference between the two and adjust probabilities. Now here we then have a 1, 2, 3, 4, 5 3-wave move in B, and then we're looking for a move to the downside in a wave C, where the common target for wave B in an expanding flat, which is the most common flat pattern where you take the low over here, is between the 1.236 and the 1.38, which is 56.6k to 57.7k, which is also in confluence with this support resistance area over here, which is the white box, after which we want to see an impulsive structure to the upside to finish wave C, moving above the high of wave A to complete an expanding flat, therefore also completing wave X, preferably after the 0.382 fib time, sitting on the 2nd of May. After wave X, we are then looking for either a flat structure in wave Y, a zigzag down in wave Y, or a triangle that is yet to be seen. Locally, we have some CVD divergences. We have these CVD divergences with the low at the moment. We had some bearish CVD divergences at the highs. These already played out as price took this low, and this little bullish CVD divergence here is invalidated. And as price moved down, we created bullish CVD divergences with the low, as you can see over here. Template is in Discord, high low in price, lower low on the yellow line on the CVD. That is a bullish CVD divergence. However, what I prefer to see is some local strength and local support. I don't really like to use this CVD divergence, but it is visible. I want to see some local proof of support with regards in this case to the CVD divergence. Bit of a move up, bit of a move down, show me some strength locally, and I might potentially get interested. So if we then look at the probabilities of the different scenarios, then on the weekly time frame covered in the live stream earlier today, probabilities remain higher to look towards the upside, where this range is labeled as a wave 4, and we are looking for a continuation of the trend. Invalidation is 49.3k. On the 4-hour time frame, the probabilities at the moment are a little bit more neutral because of this drop to the downside, as it very much depends on what we are going to get locally. Is this going to be a 5-waver, or is this going to be a 3-wave move and a move back towards the upside, which is pretty much what I explain here below the 1-hour probabilities. Of course, I write neutral. However, what we want to look for is a bigger range to form. As long as price is moving down on volume, we just need to wait for a range, and the range will give us all the info that we need to decide on the probabilities of the bullish or the bearish scenarios on the 1-hour time frame as well as the 4-hour time frame. Probabilities increase for the bulls if they can hit the 0.618 as shown before a bigger range and another drop, where the range should be similar to this wave 2 over here for then a 1, 2, 3, 4, 5. That is not what we like to see, as then probabilities increase for the bearish scenario and a move towards the downside, right? Probabilities increase for the bears if we do get a 5-wave move down, price not hitting the 618 here, and then a retracement, and we're looking for another drop to the downside. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.